Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top stocks under $5. So I hope you guys enjoy it, and overall, I hope you guys learn something. But before we actually jump into the episode, I want you guys to go ahead and check out my blog, moneywithcarter.com, talking about investing, money management, trading, stuff you guys would definitely benefit from. So now, roll the intro, let's go. Bam! So now, the very first thing you have to understand about these stocks under $5, by the SEC, these stocks are technically penny stocks. And with penny stocks, these stocks carry a lot more risk than blue chip stocks or even large cap stocks, because these are small cap. Small caps honestly have a tendency to beat the market, but the reason why they have is because a lot of people invest in them. A lot of people think that they're going to be the next, Apple, Amazon, Google. So there's a lot of money going in them. But a lot of these stocks that we're going to be looking at are just going to be stocks that are extremely undervalued, and they're kind of missed by Wall Street. So I hope you guys enjoy it. Overall, I hope you guys learned something. So now let's turn to the computer, look at the top stocks under $5. Let's go. So the very first stock here is ticker symbol F. This is Ford Motor Company. Now Ford used to trade in between $10.56 all the way, really there was some support here at $6, but it hit lows at $3.96. On the RSI, which is the relative strength index, this tells if a stock is undervalued or overbought. So as you guys see, it used to be extremely undervalued, hitting lows all the way at $3.96. Now this stock has kind of been in this little uncertainty with the market. We did have this economic downtime, which really kind of made Ford fall over 50% in a couple of weeks. Now, not to mention, Ford cut their dividend. Ford has been always known for paying that excellent dividend of around 15 cents per share. Now, with the stock only being $9 when they paid it, that is an extremely high payout, an extremely high yield. Ford did cut their dividend, and the reason why they cut it, in my personal opinion, is to save cash on hand. Now, realistically, I could see Ford bouncing all the way back up to about $7 or $8. So that would be, $3 per share, and that would be a very, very high ROI, return on investment. And really, you could set your stop loss right here at about $4.67 and just let the stock play out. Realistically, once Ford reannounces their dividend, once this whole thing passes, I think Ford's going to be one of the stronger companies to kind of push back and show everyone how much they missed out. So moving on to stock number 2. Stock number 2 is RRC. This is Range Resources Incorporated. Now this one is a stock that kind of follows the oil. So with oil going into negative territory, this stock hit lows all the way down here this year at around $2.10. Now this stock has been slowly climbing its way up, just like the oil prices, and it's right now at $5.91. I could see this stock definitely going up to $8 or $9. Literally following the oil prices, that's what the stock does. And I do think, since everything's extremely undervalued, and I do think since this stock is broke over this 200 moving average line, this 200 moving average line is a very, very strong indicator of when to buy and when a stock is changing direction. So as you guys see that this stock kind of broke above it, so now that this old resistance right here is now new support for the stock. So now when the stock comes in contact with it, it's going to have a tendency to bounce rather than fall. So I do think that this stock does have some high hopes. Realistically, this stock could definitely go in between $8 or $9. Now the third stock here is Aurora Cannabis. This stock used to be $9.05, but as you guys see, we have this kind of downward trend. And I know I always tell you guys the trend is your friend, but I do think taking a little stab at putting your money into some cannabis would definitely kind of put a little diversification in your portfolio. Getting this stock, I know it's a very, very, very cheap stock, only at 66 cents per share. But if let's say this stock goes up to $2, that's going to be doubling your money and then some. So I do think taking a little bit of your position, maybe 1% of, maybe less than that, maybe buying 5 shares, so that would be less than $5. If this stock goes to $2, you're going to be doubling your money, and then you can put it elsewhere. So the next one here is ticker symbol PLUG. This is Plug Power. So this stock, with this uncertain times, a lot of stocks have fallen 50, 40, some stocks even 60%. But Plug has been one of these stocks that's kind of just been slowly kind of still on this uptrend, which is very interesting to me. with this stock, you guys can see this yellow line here. I always talk about it because it's extremely important. Now this stock is the 200 moving average line. I'm going to tell you guys again just so you understand it one last time. This one is a stock that every time it's bounced, it uses it as support. So as you guys see, it's hit it here, pretty much here, and it did fall below, but it immediately got bought back up, and now it's been continuing its way up. So I do think that this stock could definitely come back up to the highs at $6.05, and if not, break above it. This stock has shown actually some pretty strong promise in the year of 2019 and going into 2020. Here's the fifth and final stock here. This is what you call CLNY. This is a real estate REIT. So really, this stock used to trade in between $4.38 and $6.14. You guys can see we had that support and we had that resistance right here. But we do have this very, very terrible fall, making this stock fall over 76% all the way down to lows at $1.33. Right now this stock's only up just a little bit, trading at almost pretty much $2. So it's still pretty much off about 60% off its highs. So I do think that this stock, if the stock recovers, which I think it should. So the biggest issue with this stock right here is they are real estate. So right now, if people aren't going out and shopping, people aren't going out, people aren't working. So this stock, they do own real estate. So the biggest issue that they're going to have is tenants not paying. But I do think once we have, an economic turnaround and people start going back to work, people start, going out, I do think that this stock's going to recover quite well and kind of bounce all the way back up to $4, if not $5, hitting highs at $6. I think we could definitely see this stock. So now that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall have a great rest of your day. And also, don't forget to check out my blog, moneywithcarter.com. Let me know what you guys think in the comments down below. We'll see you tomorrow. Take care. Bam!